Good morning, everybody. Happy Friday. Welcome back. A couple of levels to watch for the day. Markets are back to where they started. So we had a slight gap higher, about 0.2%. We're kind of hanging out around this big 6,300 level today. Watching a couple of things here. Let me go to some gamma exposure. We've got a big level here at 6310, which should actually put in a bit of a ceiling today. We might have a difficult time getting above the highs. So that seems like 6310 to 6220 should be a good resistance zone for today's trading. Let's go to today's expirations. Let's go all 18. There we go. So market maker, I mean, there's just a lot of cluster stuff here between like 6,300 and 6,250. This one's kind of interesting though. That's a good zero DT level. Negative gamma exposure at 6310. We already hit that level. So if we hit 6310, 20, maybe some melt ups, but that should also provide some resistance, which it already kind of has. I mean, the market has slid a little bit. We were up to 6314 today. We're down to 6300. Doesn't seem like a lot. It's only about a 15-point move. I put in a trade for Tuesday with a little bit of a dead zone, which means I want price to stay out of this by Monday, Tuesday's expiration. Just some thoughts on where we're at with this current cycle. Today's a big monthly expiration. Going into next week, we have more earnings. I want to take a quick peek at earnings whispers. Earnings whispers calendar. And then see. All right, what's the date here? Monday the 21st. All right, so Monday. Let's look at some notables. Verizon, Domino's, Cleveland Cliffs. Then we get into quite a few here. Just looking at some big ones. I don't know if Mag 7 is. I think Mag 7 starts to sprinkle in next week or the week, the final week. In fact, if it's the final week, that's going to be a crazy week. That is the uh, Mag 7 through it'd be the week of July 28th through August 1st. If we have Mag 7 earnings that week, which most likely we do, it's probably Wednesday and Thursday is when most of Mag 7 kicks. It's like Tuesday, Wednesday, Thursday. We also have FOMC on Wednesday afternoon. Nick's going to be hosting Trading Battle, and I'll be one of the participants. That'll be a lot of fun, a crazy session. August 1st is also the tariff deadline. Part of me wonders if this market can still cling to these highs if we are either turning like now with this monthly cycle, or two, we're ready to turn at the end of the month. Bullish, bullish July. It's usually a bullish July. Usually the market melts up bullish for the summer, and then like August, September, the market usually takes a little breather. It happened during COVID. It's happened pretty much every summer, at least some type of mild pullback through August, September. Sometimes it could be a bit more violent, like we saw last year. But yeah, so far we are fading for the day. So let's see where price ends up going. I do have a potential bottom at 62.50. That is tentative because obviously when price starts to fall, and if it's falling somewhat aggressively, the VIX goes up, which would push this price down. So I don't love calling bottoms necessarily for the day, but the VIX is spiking up just a tiny bit, like literally from 16.3 to 16.44. Doesn't really change my percentage unless we have like a spike up to like 17. I mean, if you look at the VIX from earlier this week when we had the rumor mill saying that Trump was going to fire Powell, the VIX went from 16 all the way to 19. That's a big spike up, like 15% for the day, and then it faded all the way back down. So it's a lot of volatility in the day. The market sold off like almost 1%, and then rallied back up 1% in the same day. So unless the VIX makes a big spike, I wouldn't see that translated into like kind of bottom picking for the day. So anyway, we'll see. But if we're just just reaching the highs, the market can kind of celebrate that milestone, and yet it may sell off and actually finish red on the day, which to me is totally understandable. I can't believe this market is willing to just keep this melt up alive and well when the reality is we should have a pullback. I mean, technically we should have a pullback. This market is actually being very stupid to not have some type of 3, 5, 7% correction. So hopefully we get it, and I think we will. It's just a matter of the hardest part is when. So I mean, if we go from like 6,300 down to 6,000, don't be surprised. It's not going to get there in a fun way. It's going to get there like with drama, and it's Trump this and it's tariff this and it's blah. Who knows how it gets there? But the point is, I think it gets there. And this week's video that I posted was watch the key levels at 63, 6,200. 6,300 has been resistance. We just poked and poked and poked, and we got to the highs. So we're at 63.15 today. Big deal. That's still resistance. There's obviously some fluctuation. Like it can hit 10, 15, 20, 30 points above resistance and then fade, which is what I think we're experiencing today. Okay. So intraday price action. Yeah, we hit 63.15 today, but we're fading off that. That's called resistance. It's not perfect. It's not exactly at 63. That's also the beauty of trading options. If you were to sell a 6,300 or 6,305 call today and put in a bear call spread, you're getting paid on that right now. So the resistance is holding. If you sold here at 63, you got paid. If you're selling here at 6,300, you're getting paid. That's not a bad thing. So anyway, we'll see what happens. But I think the market has to have a pullback from now until like September. I just don't know what the news alignment's going to be, what the headlines will read to make it all happen, or to at least drive and fuel the move. But I just think technically it's overdue. Pulling back to this 50-day moving average is at 60.50. That pulls back to that ceasefire gap. That's the minimum to me. So minimum pullback here, possibly a flush down back into support. I still think there's a lot of support. I think it could make the market pretty nervous if we settled in at like 58 to 5,700. But right now it's still just waiting to see like if it can't break the floor. That's kind of what's going on. We have a little resistance here, and it's just kind of danced around these tops. But if we break that 6,200 floor, it doesn't take much to push this thing down a few hundred points. So if we break 6,200, I am actively looking to do bear call spreads until we at least hit 6,000 or lower. Okay. So hopefully that works out pretty well. I have a trade right here out to August and September that if we do have a correction, then these trades look pretty good. I have a I think it's a 260, no 230, a 230 credit and a $1.60 credit. So total's 390. And that's with also a profit trap of $500. So those trades are still running out to August and September. I think we do get a pullback and a correction. And the market doesn't, hopefully the market doesn't just resiliently snap right back up to the highs again. But based on this, if this 390 is trading for $1.40, maybe under $1, I'll probably just take the profit. Okay. Had some pretty good wins this week. Ended up closing Palantir for 96.7% of max credit. Ended up taking some new trades on Apple this week, on Zoom this week. Did some rolls this week on NVIDIA, close out a naked put on that one. Rolled TLT, rolled Tesla, rolled MicroStrategy, rolled SPY. Let me double check my expirations, make sure I'm not missing anything. I had a butterfly spread that I closed out this morning for 130% winner. That was pretty good. Let me just double check that I don't have any expirations out right now. So SPX. So this one is for profit. That'll be full profit. That'll be full profit. That'll be full profit, full profit. So I've got what? How many trades? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 winners on SPX. This one's out to Tuesday, end of the month. This one's looking good. Is up 90% of max credit right now. These trades are August and September. So a lot of trades there on SPX. Okay, fine. I should have a lot of profit, which is nice. Next up, Tesla. I've got some puts that are expiring. It's a $100 put. Oh, big deal. I still know my break evens. That's the important thing. I still have the 260s. So the 280 calls, 260 calls, I'll continue to roll those. Tesla's trading at 327. I've got some about 45% of the bull put spreads. Earnings on Tesla coming up soon as well. Qs. This one's going to be a loss today. That's annoying. Let me see. What's my max risk here? Max risk would be $1. What the hell, man? Well, I'm clearly not going to close that. Okay, so this is going to be a max risk of 40 cents at, so $200. This is actually exceeding what I'm gonna lose. This trade will be a loss of 200 bucks, not 340. So that's actually showing more, which is annoying. Okay, but what else? I think that's it. Then we have profit there. This was out to the end of August. Bull call spread, hedging, fine. SPY trades, I closed out SPY trades. This one's going to be a loss of about $16. The other one was a winner for about 50 bucks. July, hedges, naked puts. Still have a lot of profit potential. I mean, I sold these in like April for $6. I mean, there's still a lot of time decay. It's a 475, which is below April lows. MicroStrategy hanging in there. No pressing expirations. Collar trade. The put side of the collar trade will be expiring, which is fine. I'm way in the money on these trades. So the 310s, 390s, and 310s, those are covered calls. I'm just going to keep rolling those, getting the income on MicroStrategy. Lift. I do need to add this for next week. I need to add that lift. Maybe I can do that today during session. Is actually these are all in profit, so I can close each one of these down, or I can just roll it, which they're essentially trading for full profit, right? You see 100% P&L. So if I just roll these out and down, my break even's like 14 bucks. We're trading at 14.47. So if I wanted to get more aggressive, I can just sell a $15 call and just exit the trade for a small win. My break even actually is lower than that. My break even is like $12 because I bought the shares at 11, added a collar trade, added a put for protection as well. So I guess I could just let it run. I mean, I'm up $4,300. I don't want to choke the upside off too badly, but lift is not looking super encouraging for a run higher. Right, like this is the big pop in earnings. I thought we'd have more of like follow through on robotaxi stuff, but it's not been there. Uber's been fading off the highs recently. Lyft is kind of coming back as well. So maybe it's just more of an accumulation phase, which shouldn't really bother me. It's like this move. Let's say we're making higher lows, we pull back into this gap level, and then go from there. I think I should just kind of chillax on this. I think we can get to 18, 19, $20. Then I'll sell a call because I just own the shares. I don't really have to worry about the timing of it. I didn't do a diagonal spread. This is just own shares. So I have all these shares, but I do want to lower my cost basis. So I'll put that on the to-do for Monday. American Airlines, this is going to be for full profit, up about 750 bucks. That's a winner for the day. Yep. NVIDIA did some rolls. The put side of the collar trade is going to be a loser. That's fine. I'll just watch the call side since we're trading at 172. Or it calls at the 130 that I'm rolling. Broadcom, I'm taking a loss here. That's fine. This should be 250 max. What's it trading for right now? 245. See if I can save myself a couple cents here. $245. Can I save 5 cents? Survey says no. Cancel. All right, it's gonna be a full loss of 250. So I'm losing $1.20 on that one. No big deal. Annoying. This trade, this one didn't go anywhere. I'm gonna close this one down for a small loss. 22 cents credit. See if this will fill. See if I get 25 cents. 25 not filling. Come on. So rather than losing the full debit, I'm going to take a little bit of a smaller loss. Come on, give me 20 cents. This thing doesn't seem to be very liquid today. All right, let's go 15 below the below the mid price. There, 15 cents. So NWSA. Is here. 56, closing out for a 15-cent credit. Taking the loss. Oops. Equals 56 minus 15. What's the loss there? 41. So 15 minus 56. There. So loss, but partial. All right. So closing out this trade. Okay. Updating the trade here. At end of day. Okay, and then I have one more trade in, little DJT that is also showing a bit of a loss today. It's down 96. It's actually down full. Yeah, it's down full right now. This stock didn't move at all. That's annoying. So, all right, I'll take a loss there. That'll be fine. All right, let's keep going. Currency strength overnight. New Zealand on top, Aussie on top, dollar weaker. Dollar's been pretty steady to the upside the last couple weeks, and looks like the dollar turned kind of right at 6 p.m. last night. Dollar stayed weak all day, as well as the Japanese yen. New Zealand making a nice little comeback. Let's take a look at some currencies. Still holding my position long Aussie CAD. Aussie Swiss, I'm still holding long. Aussie yen, we had like a one-day sell-off, and that was it. Aussie New Zealand, I'm still holding long Aussie New Zealand back to the 1150, possibly 1400 highs. I'm still just going to dollar cost average into this thing long. Aussie dollar. I'm shaking my head here. Like, this Aussie dollar is in an incredibly like textbook pattern, and it's almost frustrating because it's so weird. It's almost like all this stuff is like heavily manipulated right now in the markets. So I mean, I wouldn't be opposed to buying dips on Aussie dollar, but I can't keep buying like higher lows, higher lows. I don't like that trade. So I'm hoping we have some type of pullback into like 6,300 or 6,200 to offer that as a better setup. CAD Swiss, I'd like to think the CAD Swiss can make its way back up from divergent lows, oversold conditions, to historical lows, to maybe just not going down for a second and getting back into this cluster at like 62 to 6,300. It's not there yet. Still waiting. CAD yen, no trade. Best trade was off that 101.70 level. Swiss yen still hasn't made a real turn. It's at historical highs. Um, a price pattern would be great. A break of this trend line would be great. Just hasn't happened yet. Euro Aussie, stay out of this one for now. Euro CAD, stay out of this one. Euro Swiss, strong support at 92. Waiting to see if we get back to like 96, 97. Euro Pound, possibly just a new range trade. High, low, maybe a range trade on Euro Pound for a while, which is pretty volatile. I mean, that'd be a 250 point range. For the Euro Pound, that's a lot of movement. Usually you don't see this currency pair that volatile. Euro yen, no sign of slowing yet, coming into some pretty heavy resistance between 173 and 175. Just be mindful of that. Plus, we're registering overbought conditions. Euro New Zealand, no trade. Euro dollar. This is not the pullback that I was talking about. So, like, I expected the dollar to catch a bit of a bid. If this is high, low, lower high, lower low, Okay, maybe that's all it gives us, like a 114 ish. I think the dollar could possibly pull back into like the 112, 113 zone. So either this, pulls back again for the same top and then sells off. You break the low and you measure that move down. That'd be kind of a symmetrical breakout. Or we have a high, low, lower low. Or this is the trickiest one. We have a push back up to highs again, only to see it come right back down. But it's like I'm looking for at least a bit of a near term high or top on euro dollar, also holding the lows on DXY. Okay, pound Aussie. I'm going to say no trade on that one unless you're buying this support around 204, 204.50. Pound CAD, if you sold the 8,800 zone, that was a pretty good resistance right here, equal highs. So little test of those levels, but good price action respecting that resistance all the way down for about 500 pips. Pound Swiss, if you're willing to dollar cost average into this one low enough, not a bad spot to enter. Area 1, area 2, I'd say target 1 would be right here for profit, or anything higher into this pocket for profit would not be a bad spot. But you got to be willing to, I'd say buy small. If you have margin on this one, this is typically, at least for a US trader, like 2 to 3 times the margin of other currency pairs. So I tend to trade this one a bit smaller for that margin. Pound yen, I don't know. I would say just watch this, see if it breaks. Watch that trend line there. If it stays on the left-hand side of the trend line, still in a buy zone. If it breaks and rolls over, then maybe we have a sell. Pound New Zealand, totally choppy right now. I'll box this thing in. So support and resistance. That's kind of it. Pound dollar, maybe a swing trade. We did tap these lows. If we pull back into, let's say, 35, 3,600, good looking sell trade for the stop above and see if this is a swing down. We've gone up from 2,100 all the way to 37, 3,800. I mean, that's a 1,600 pip move. And other than that pullback, that's all we've seen. So I could see the market at least finding from a Fibonacci standpoint something like this. Fully pulling back to like a 38% or 50%. So if I'm looking at profits here, high, lower, low, find the 38%, find the 50%. It's a pretty good looking swing trade as far as reward to risk goes. Not bad. New Zealand CAD, I'm still long. I'm still not getting the pullback, man. I want to get a pullback here towards the 50% zone. 80, 78, 80, 80. I'm not getting the fill. So I'm still long. I'm holding long in here. I bought these lows a while back. I'm just waiting for like a push into symmetry of some sort. And maybe this is not going to be my symmetry, right? So maybe this is my symmetry. Maybe this is my symmetry there. So we pull back to the 382. Okay. I mean, I think maybe we get up to 84.50, maybe 8,600, test this previous high. I just thought this market could pull back to like a 50618 in kind of the efficiency that this pair is good for. I'm still long though. I'm still long at these lows. It's just above break even, but I'll still hang on to it. New Zealand Swiss, I'm still long. We've got a decent bar count on this one, plus I'd say pretty strong support here if it holds. So maybe this is a swing, deep pullback, swing to symmetry, deep pullback, swing. I'm looking for a 3 or 5 wave move. There's a lot of support back in here. So 5,300, 5,350 is a good profit target for me on this one. New Zealand yen, still melting up higher. That's fine. New Zealand dollar, a little bit choppier, but still kind of open space. If you're willing to, buy small and maybe have a second position in here, stop loss below, I think this New Zealand dollar still gets to like 63.50. I mean, it still gets there. The problem is right now, it's like every bank has cut rates except for the dollar. The Fed is not cut. They're the last one to cut. They're like the last one to raise, the last one to cut. It's funny how that works in the central bank system. It's like Fed sets the tone. A lot of other central banks jump the gun or just do it ahead of the Fed. Fed gets a lot of free mileage out of talking through rate decisions and what they're going to do transparently to the market. And so, I mean, if you bought New Zealand dollar right now, it's actually a negative swap just for, well, I mean, for a while until the Fed starts cutting. Dollar CAD, just be mindful this is a very messy zone. There's a lot of resistance here around 38.50. To me, if we get back above the 39 to 1.40, then maybe this is a run back up to the highs. Otherwise, this is probably a messy zone. I'd rather be buying the dollar CAD down here around 34 or 3,300 if possible. So I don't think I'm going to take a trade in the middle. I'm still waiting for a kind of a better zone. Dollar Swiss, I'd love to see a price pattern at these lows. Do we get a price pattern to work its way back up here? Swing and take out a high, pull back, push into symmetry. That would be a good enough spot for me. I'm not trying to hold it all the way to 92. I think I'd be very happy at like 87 or 88. My break even is around 85. Actually lower now because I have, this low is added in. So this probably lowered my cost basis by 30, 40 pips. But ideally this pocket is what I'm after. If we can go after that, like 80, what is that? 8,800, 87.50 to 8,800 would be a good pocket fill. The dollar yen, a little hesitation at the 149, 150 handle. I had mentioned this as a channel, like so, right? So it might hold up here. A lot of support become resistance. If it gets up into, let's say 150, 151, that's okay. But take your short-term alignments and see if it stays inside this channel. Okay. I don't know what it's going to do. I just know that if we break 140 in the bigger picture, if we break 140, this thing's dropping to 120. So at some point, this could be a very exciting trade. But don't get too excited because what's going to happen if we go from, let's say we go from like 158 or 160 all the way down to 120. That's going to be a terrible environment for the dollar, a terrible environment for risk appetite. If the Japanese yen is going to get that strong and that sustainably strong, we're going to have a crap ton of volatility that's going to make traders lose their minds. So as good of a setup as it is, it's almost like based on the Bank of Japan's, safe haven status, you really don't want to see the Japanese yen get that strong. Because if it is, that typically has repercussions, like i.e., look at last summer, July to August, right? The big sell-off in the Nikkei, the big sell-off in the futures market, the big sell-off in the U.S. markets down 10% in 2 weeks. That was a lot of that due to Japanese yen and safe haven flows, plus their deleveraging of the official cash rates. So they made it so it's difficult now. You can't really borrow at negative interest rates anymore to just arbitrage it anywhere else. Now their interest rate is 0.5. They're the only central bank that's been raising rates over the last couple of years. Okay. So anyway, it's just a big trade. Put it on the radar. The way I'm going to trade that is going to be Japanese yen futures. So 6J is how I would express Japanese yen, and FXY is how I'm holding shares that express the same thing. So if we come back here on 6J, I'll probably go out like 6 to 9 months and just place a bull call spread. There's no negative swap. It's just a futures contract. It would cost me maybe a couple of bucks to take the trade and, make hopefully 500 to 1,000 bucks on it. And that's the trade. Okay. What else do we have? Let's go dollar index. Dollar index broke a trend line. Came back to the 50-day moving average. That's what it's hitting so far. A little in between the 50 and the 21-day. So right in here. If the market sells off a little bit in between the 50 and the 21-day, I think we can go a little bit higher towards the 100. I still think we can get up to around number like 100 or 101 or 102 before the dollar looks to get faded harder. So I'm not selling the dollar yet. I think the dollar still has room to relief, like a relief rally and a little bit of a squeeze. It was a pretty crowded trade, but we've hit some symmetry and we had like one of the worst starts in 50 years. Oil hanging in there. I think 65 is a good level of support. Natural gas up to 1593. I've got a 1650 call. Gold, chop suey. I mean, gold's honestly like pretty boring for now. I mean, it could be a little bit more exciting, but if gold maybe breaks again, there's really strong support here at like 3,100, 3,000 round number level. I've been talking about this for months, but I'm not really interested in buying gold at these levels. I'm interested in positioning for either I want to own gold down here, or I'm going to wait to establish more long positions if we hit like the 144 to 200 moving average. So I want to see gold get into this area first before I start adding more exposure. I'm still long. I'm still holding long. Still profiting from long, but I don't think we go too much higher without having a pullback first, or at least going sideways enough that we end up catching up with this 144 and 200 moving average. Silver, I think silver is if I'm playing precious metals, I know silver's not a precious metal, but it's a more industrial metal. If I'm playing anything that looks bullish, silver is a good trade. To me, silver making a run to 40 plus has room to go up to 48. It still has one of the better technical setups I can find. Um, and even if this is a channel, okay, I get there's resistance and support, and we might have higher highs and higher lows. But if I stayed consistent and committed to silver, I think we can get to $48. So without adding a ridiculous amount of exposure, I'm going to continue to hold my positions. If we get dips and pullbacks, I'll add more exposure on some silver futures and just continue to kind of fight this thing out. But any dips, probably SLV credit spreads or even a silver future debit spreads. Because with SLV, I can own more shares. With SI, I want to be right directionally, so I'd probably do debit spreads. Bitcoin, hanging in there, hit 123 and change. Now it's pulled back to 118. Could possibly be pretty well supported around like the 112, the 110 handle. Anything below, I'd say like 100 would be a little bit more caution. If we get back below 100, I'd say, pump the brakes on Bitcoin exposure or pump the brakes on Bitcoin excitement because we might have a bigger pullback coming. But if we just rally higher, which we did here, and then we have another breakout point, like maybe this just either goes sideways for a bull flag and goes higher, or this pulls back slightly, retests recent highs, and then goes up again. I'm still measuring moves out to 130. If we get a little bit more of a capitulation move, we can probably hit like a 150 handle this year, which obviously would be pretty exciting. I mean, I've established positions pretty routinely in Bitcoin, and that's one of my better positions right now for the year. MicroStrategy pulling back a little bit. I'm still flipping for income with covered calls that are way in the money. Coinbase, you've got to be shitting me, man. All right. Well, this is out to literally next week. Let me see what this one's doing. I've got a call condor in this one. I can't believe this thing is ripping the way that it is. I mean, Bitcoin's not going anywhere. What the hell is going on with Coinbase? Earnings are not until July 31st. My expiration is the 25th. Is this more stablecoin crap? Congress approved legislation establishing federal rules of stablecoins. Oh, geez. All right. Well, 444. Let me check here. 455 is my threat. So right now it shows that I'm down 105. This expires next Friday. I actually have a profit trap at the 445 by 450. So it's a 5 wide debit spread by a 15 wide credit spread. This should pay me 60 cents. The nice thing is if we stay where we are right now and we just drift higher, if we just drift a little bit higher, I could potentially have a profit trap where this thing pays more than 100%. So my fingers crossed for next week that this one doesn't just continue to rip. It's like maybe the news got priced in today and this either fades or just drifts up slow enough that I can maybe get that extra $10 to $15 move, and that would give me a $500 profit trap on top of the 60 cents. So we'll see. Hopefully this is a good trade. But I was thinking it's going to be like this, like slow grind, but it's like, nope, it freaking jumped up here to 444. So a little time to care over the weekend will certainly help. This could bring that profit trap into play next week. So keep an eye on that one for Pulver alerts. If Trump remove, he can't. That's the thing. He can't. Trump has no power or authority to do what he says he can do, which is fire Powell. He can't. And remember, Powell was appointed under Trump. So he was his Fed guy back in 2016. It's like it's just so stupid. Like honestly, like I wish I could just tune the whole thing out. You can't. It's impossible. Trump. Good luck tuning him out. You can't. But it's almost like this week with the sell off that we saw with this rumor right here. It's almost like you remember Liberation Day. Remember like April whatever it was, April 9th. Good time to buy. It's like they tested the market, and it's like that little rumor mill of like a White House official and GOP lawmakers, blah, blah, blah. It's like it hits the headlines as a rumor. The market reacts terribly to it. And what does Trump do? He pivots and denies it. It's like we're just in this weird politicized news machine that's like making the market really sensitive. So anyway, he has no authority to do anything. The Fed should be completely independent. Even if Powell like sticks out his term, which I hope he does, for the sake of just I don't know, just one person having like common sense, do your job. Inflation, employment, price stability. That's the mandate of the Fed. That's his American duty, I suppose. Do it. as opposed to whatever noise we have from Trump and company. So it's just wild. So all right, coin. I'm going to watch that one there. Let me set a chart alarm at 4:55. This would be my call condor profit trap. So see if that gets there. I'm hoping that this kind of just fades, but going into next week, that profit trap could be pretty good. Let me see if I still have that image. Let me go Pulver alerts here. So stock options, Palantir, close it out for a winner. Here's Zoom. That was a new trade. Apple, that's a new trade. Coinbase, here you go. So this is what I posted in Pulver alerts right here. So the 445 by 450 by 455 by 470, it looks like this. So live price is trading around 440. So I'm still right here in the trade. Okay, I'm still right here in the trade. So I have a little bit of wiggle room to go up another Qs. That was a waterfall closing for profit. Okay. I have another like $21. We're trading at 434 right now. I guess are we at 434? 436. So 436. All right. So I have nearly $20. So we're at 436 right here. Okay. So I still have, the profit trap starts at 450. So we can run up another $14. Then I have a profit trap that's worth $5. So if we just keep going a little bit higher in price, that gets me into my profit trap. That will take effect hopefully next week. This is maxed out on Friday. That's the expiration. And we'll see where it is. But hopefully this holds. And I'd love to get a bonus trap. That was the whole point of the trade, was taking advantage of the call skew and going out of the money to like the normal options chain. And hopefully that's, I don't know, hopefully it's good. We'll find out. All right, get this out of the way. Ethereum, another daily high in Ethereum, no complaints. I'm long ETHA, gapped up again. This has been working out pretty well. ETHA is now up around $9,700. I just bought the shares. I bought the shares like not that long ago, literally maybe 2 weeks ago. Up 10 grand in 2 weeks. That's not too bad. Do I want to take profit on this one? Not yet. I'm looking at profit up here towards the 30 handle on ETHA. If I was buying EETH, I'd be looking at highs at 81 to 85. If I'm on Ethereum, the spot price here is around $4,060. So if the spot price hits 4050, 4060, I'm going to start taking profit on my ETHA. That's my trade. Like I know that this could be a trade that runs aggressively to the highs and then maybe pulls back again. We have a low, we have this neckline, maybe it's an accumulation phase, and then we break and go higher. So if there's going to be a trade out of this thing, there might be a chance to reload this position. If I miss it, then it's like, well, we run up here and we just keep running, I guess. But I think once we get here, it's like trail some stop losses, take some profit. If it pulls back, I can get in again, try to get the highs and break higher. So really, this is just something that sets up for a potential swing trade. Swing, pullback, consolidation, and then maybe more. If there's another chance to accumulate in here, that'd be a good spot to buy. But I'm taking this run. I mean, we bought it basically right here, and I'm going to try to take profit at these highs. So it's a pretty good run. And that was around a 50% take profit. So right now I'm up around right here, 37 and a half. So I'm close. I mean, if I get into 50 plus, I'm taking some profit to protect. That should be 12 or 13K. Not bad. Not bad in a few weeks if that's how fast it moves. Copper, anything here? Not really. I would consider maybe fading the copper move. Bid ask is really wide after that distorted move when we announced a 50% tariff. But if copper just kind of chops around in here, if it comes up to the highs, I wouldn't mind looking at a top to sell some copper. But it'd be risk defined. I don't know. I honestly like maybe that's a terrible trade, to be honest. Look at this thing. Like once we had that 50% announcement, this thing hasn't done anything since like literally the day after. So 50% tariff announced and then completely sideways. I should have looked at like something directionally neutral and just try to take advantage. Like an iron butterfly would have been perfect for that. But anyway, I didn't. I just thought it was a crazy move. What else? The DAX just off of all-time highs. I'd like to see some oscillation here, maybe pulling back to equal lows at 23,100, 23,000. Fez, I'm still long puts and shares. FTSE creeping up towards highs again. Argentina, I'm going to stay out of that one. China making a nice little run to all-time, or not all-time highs, but back to highs. So China's getting some love here on Hang Seng. Brazil still hanging above the 200. Latin America above the 200. Mags, some fresh highs on Mags today, but is starting to fade. I think this is, Mag 7 earnings. We'll see how things are, like how good is growth? What is the overall trend? I still like Mags, buying dips. I still like Mags selling puts, collecting a lot of premium. I mean, the premiums aren't terrible. Apple at 210. I think Apple's pretty well supported at the 200 handle. I put in a ratio spread this week at the 170 by 165. I talked yesterday in the afternoon session, just selling like, either a naked put or doing a like a buy right, where you buy the shares, write a covered call against it, try to get some income out of it. This one isn't really a high flyer, So I mean, I think Apple could maybe drop towards like 200, but 200 to 210 kind of stuck right now. If Apple gets above this, though, pay attention to this. If Apple gets above the 200 moving average, I think Apple also has the ability to play catch up. Low to high, pull back here, push higher, maybe gunning to all-time highs. Remember, Apple as a Mag 7 is a potential catch-up trade, right? Meta's at all-time highs, Microsoft at all-time highs, AVGO at all-time highs, NVIDIA at all-time highs. All those big top 10 stocks have hit all-time highs. Apple's still sluggish. Tesla's still sluggish. Google's still sluggish. Amazon's not at all-time highs. Like, if we get to those levels, that could be some good destinations for this year. So I think if you, I don't know, I like 200. I really do. I think if you're owning shares at 200, willing to sell calls and lower the cost basis, Apple still has potential to get up towards 250 again this year. All they need to do is start talking about AI, and it'll probably rip. Amazon just kind of slowly grinding its way up towards 240. Broadcom, of course, today's the day it pulls back. I need it to fall about 15 points, which it may or may not. I don't think that's going to happen, but we'll find out. Google, ratio spreads at 135, ratio spreads at 105. This should be looking pretty good for some profit. Meta, falling off the all-time highs. I'm just waiting. It's also expensive, where I'm not doing much on this one unless we have just really good discounts. Microsoft, I'm still long on Microsoft. Netflix, we had earnings. Earnings was a beat on top and bottom, but the price is faded. I didn't get the sell trade that I wanted. I was trying to fade this thing at the expected move at 1400. Didn't get filled. No big deal. NVIDIA, 171. I'm just rolling calls. That's it. Tesla, I'm rolling calls. Berkshire, if we get above the 200 moving average here, if we get back above the 200 moving average, Berkshire looks pretty good. Stop loss below. Low risk, high reward. Bonds, maybe catching a little bit of a bid. That's it. I do wonder what the bond market does post August 1st as well. Like this tariff deadline stuff. Does the bond market have some safe haven bids? Is this what's going to help the market if we have a like a bit of a risk off tone for a 5% correction? Does it help the bonds catch a bid? Does it help the dollar catch a bid? To be determined. But I think once we have this like tariff stuff out there, and the market has to kind of soak it all in for whatever it is, 10% global tariffs, 20, 30%, 50% random stuff, whatever Trump wants to do, at least it's out there for the market to hopefully digest and kind of price in. But I don't know. I think as long as we keep confusing everybody, it's like the bond market's going to be kind of a mess. 10-year yields still sticky. We're still way above what Liberation Day levels. Average mortgage just went up 6.7 to 6.75. Anything on like market liquidity? That's still pretty stable. This is what happened during Liberation Day. So just a big blowout in credit spreads. It's back to pretty tight right now. Alibaba gapping higher. That's encouraging. Baidu, a lot of volatility, but still off the lows, which is kind of nice. So I still have some shares of Alibaba and Baidu. FXI, trying to get, maybe I'm going to take some profit here. Check some FXI. Maybe I'll take some profit. Up about 870 bucks on this one. I don't really want to hang on to this one too much longer. Large cap trying to, it's like, well, if we have a double bottom, that is my measured move. I'm going to stick with this trade. So we have resistance. If we break this high, and we are going from double bottom to measured move. I suppose I can hang on to this a little bit longer towards like $45 or $46. So I was tempted to take some profit here, but I think I can make a bit more. So I'll try. I'll try to make a bit more money. All right, that's FXI. KWeb. I don't think I have KWeb in here. I do not. I took profit on this second test. We had this big rip on KWeb, big pullback. Once we retested, I took profit around the $37, $38 level. JD is up to, oh, what's up, JD? Making a nice little move. JD have some shares. This one's probably worth closing soon. I'm up 92% of max profit, 522 up 482. September, yeah, I think I'm going to take some profit here. That is, what is this? JD. So naked put combo. I'm going to close here. 522 trading for hopefully like 40 cents debit. See if I get out of here for 40 cents debit. Not bad, 41 cents. So that was 522. Close for 41 cents. I'll take that. Garbage. Naked put combo. Close out for 41 cents. That's pretty good, Phil. Yep, I'll take that. And naked put combo here. Closing 41 cents. Nice. All right, so get some buying power back. That was 300 shares at 556. Closed them out for 41 cents. It gives me a net win 5.2, 5.56. So it's over $500. Not bad. 480 on some. This was filled at 5.25. This was filled at 5.25. So $480 there. This one had a really good fill, up over $500 on that one. Cover call at 36, 36, and 36. My break even on these 1,500 shares. Trying to think. Break even is somewhere around like $31, maybe $30. Let me check on my spreadsheet here. Break even 33.78, getting it called away at 36. I don't mind it getting called away. I'm not trying to be cute on this one. If it gets called away for, 222 a share at 1,500, still makes me some money. So it makes me $3,000. So could be worse. I'll just keep adding covered calls. Now the premiums are going up a little bit. This is an August 1st one, so hopefully I can be like a roll, or maybe it rips up enough to get it called away and I can roll it. Anything else? Dividend growth, advanced decline, market breadth, 50-day moving average. So no, I mean, the only reason I look at these market breadth indicators is if I'm timing like a top or a bottom. It's not quite there, not quite there, not quite there, not quite there. So we're just not there for like a top bottom yet, or I'd say like a broader top or bottom. Anything else? Costco, I want to take a look at earnings again next week. Anything highlights? Wednesday, Thursday, Friday. This is a big day, obviously. Lockheed Martin, Coca-Cola, Philip Morris, Home Builders, D.R. Horton, RTX. That's been a big runner in the defense and the aerospace defense space. Now Northrop Grumman, Pulte, Home Builders. So we have D.R. Horton and Pulte next week. Halliburton. Pentair. Sorry, I thought Palantir. No, Pentair. All right, next. So that is what day? Tuesday. So Tuesday, we have D.R. Horton. So that's DHY or DHI, PHM. We have Coca-Cola. Lockheed Martin is LMT. RTX. NOC in the aerospace defense section. Okay, yeah, I mean, we have a lot of earnings. This is actually an easier way to read it. Stock twits. Go to earnings and just see what's on. See just what's the quantity next week. So we start the 21st. We have a decent amount reporting. So slow to get started, 28, 69, 119, 146, 26. We have 388 companies reporting next week. Notables, Tesla's next week on the 23rd. That's aftermarket Wednesday. NEM is at Newmont. So Tesla's probably the big showstopper next week. T-Mobile, not too bad, but some earnings to play and look at next week. So I'll be looking to price some of those in. Okay, everything else looking pretty good. Fresh highs again in the portfolio for the year. That's not a bad thing, and I'll just enjoy the melt up. I think we still have a correction coming. It's just, what do I do with it? Honestly, at this point, a correction coming. We're so far above some of these moving averages that I would still think the market has a lot of support between this level, this level, this level, this level. At the very least, a pullback into this level is going to try to retest the highs. Maybe that's enough to offer another dip and just another melt up. But I'm just not sure. Like I'll pull back here, wait for a trend line break to get long, or I'm going to start selling a lot of options. That's really what I'm waiting for. If we get a pullback, I'm just looking to sell more options, position myself towards, April lows, or position myself maybe more aggressively. I mean, if I'm right and the market holds this level at 5,700, maybe I don't have to do anything here. But if I can position out here for a decent income, then I play this out to November, December, January, and see if I can pull in some credit and just have the market kind of remain stable. The scary part would be if the second half of the year we go into recession and the market's like, bye-bye, and then the broadening pattern comes to fruition and we're at fresh lows. That would not be fun. Fortunately, I would say that my 16 to 1 hedges and my 25 to 1 hedges and my 44 to 1 hedges could actually help me quite a bit weather that storm and limit some of that exposure. But if these are all worthless and the market just grinds and grinds and grinds, then it's going to be a trader's market, and it's going to be an income driven market, and we got to be able to survive either way. So we'll see. All right, everybody. I'll let you go for today. Appreciate y'all being here. Make sure if you've got available discounts on EdgeFinder, grab them. If you want to sign up for Pulver Alerts, grab them. And we'll keep fighting the good fight and grinding the markets. All right. Thanks, everybody. Have a good Friday. Good weekend. See you soon. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.